What's up, everyone? It's Kadi with MoneyVest. So in this video, we are going to be talking about Apple and Tesla. Tesla and Apple, both of them seem to be underperforming so far in 2024. These are both companies that are down on a year-to-date basis, which is actually quite surprising because both the S&P and the NASDAQ are actually green. And so we're going to take a look at these companies. They're both coming down to some very, very attractive levels, both from a fundamental and technical analysis standpoint. I wanted to club Google in this video as well, but I'm going to be doing a separate, more dedicated video on Google, going over the technical and the fundamental analysis on that stock as well. I actually did do a video on both Apple and Google a couple of days ago, so definitely do check that out on our MoneyVest channel. But in this video, I wanted to break down Apple and Tesla more specifically because there are some concerns, of course, with respect to margins and price cuts on Tesla, and of course for Apple with the EU fine. Weaker sales over in China, and not to mention Warren Buffett's catalyst, which is based on the 13F filings. Warren Buffett did sell about 1% of his stake in Apple, which is his biggest position in the fourth quarter of 2023. And if that selling pressure continues, that's really going to drive retail investors out of the stock here, which obviously is not going to be great news for Apple in general. So hope you all enjoyed this video and find it helpful. Make sure that you drop a like and of course subscribe to the channel if you're just joining us for the first time. And again, links to our Discord and Patreon is going to be down below if you're interested in joining us. And of course, getting access to all the members only private videos. We've got over 46 tutorials and lectures and members only private videos, including all the Excel spreadsheets, all the trade alerts and trade ideas, including all the Discord access, and of course our MoneyVest.com platform that's going to be coming out here very, very soon. And do connect with me on Instagram. My handle is going to be CASWRP as well, and I do post a lot of interesting stories and updates and portfolio updates and tips and strategies. All that stuff's going to be linked down below if you're interested in joining us. So Apple stock could be slaughtered if Warren Buffett sells more of it. This was a warning from analysts at Mizuho, and one analyst warns that worse could still be yet to come for Apple, the second most valuable company in the world. Of course, Microsoft took over Apple as being the most valuable company in the world at over $3 trillion market cap. Apple is still struggling right now, so Apple is now down to 2.7, I believe, 2.7, 2.8, 2.6 trillion dollars. So this has actually been quite a remarkable sell-off in Apple here over the last couple of weeks, and you can see that is down on the week. It's down almost 6%, and it's not even Thursday. So we are definitely seeing a very, very bearish week for Apple. The last time we were actually down this much was back in September of 2023. Actually, January of 2024. So far year to date, Apple stock is down a little bit over 9.6, almost 10%. And Tesla, of course, is down a little bit over 25%, 29%, so almost 30% now. So Apple stock could be, quote unquote, slaughtered if its biggest non-ETF shareholder, Warren Buffett's Berkshire Hathaway, further trims his stake in the company. This was Mizuho analyst Jordan Klein told investors in a note. And of course, there was a 13F filing last year, which showed that, Warren Buffett and Berkshire Hathaway sold off 1% of its stake in Apple in the last quarter of 2023. And Klein went on to suggest that Buffett is likely already selling off more shares as one of his largest positions, looks to be in trouble if that proves to be true. Once the information comes out, it could mean disaster for Apple. He knows that when the 13F comes out showing that he started to sell, that Apple shares will get killed as retail investors rush for the exit. So this actually is indeed one of the biggest concentration risk for any companies out there, because Warren Buffett's name alone holds so much of weight. I mean, this is something that we haven't really discussed all that much, but if you take a look at Apple's valuation, I would argue that Warren Buffett's name alone adds about 20 to 30% of the valuation premium that Apple should be deserving to be trading at. Because in my previous videos, I've constantly mentioned that Apple's innovation is okay, right? It's not at the top of the list. I mean, there's far more innovative companies, and Apple's business is not really new iPhone sales, but it's mostly upgrade business as people upgrade their iPhones to the newer model over the last, 2 to 3 years. I mean, if they're using the same iPhone for 3 years or 4 years, they would upgrade that phone to a newer model, and that's really what Apple's business is all about. It's not selling new phones. I mean, even though there's a small segment of buyers that are switching over from Android over to new iPhones, and there are some switchers, but majority of their business is upgrade business, which is basically people switching over from a previous model to a newer model. But the innovation, like I said, is not really that much. I mean, you can not even tell a lot of the difference between, 1 year ago phones, right? So 2023 models versus 2024 models or 2022 models, they're all the same with very, very small differences in screen size, cameras, basically the speed at which the iPhone responds. But at the end of the day, it's really just same stuff that we're buying constantly at $1,200, $1,300 per year to continue to kind of upgrade their iPhones. So for that reason, I've obviously mentioned in my videos before that Apple's valuation is expensive. Net income hasn't really grown all that much. I mean, it has gone up 6-7%, but the earnings per share growth has come on the back of a lot of financial engineering because Apple is just a huge buyback king. I mean, it tends to buy back, hundreds of billions of dollars over the years. It has put back into its own stock. So it's definitely seen a significant amount of share buybacks, which has obviously grown that earnings per share and has increased that earnings per share growth to well over 12-13%, resulting in quote-unquote a growth stock, even though net income hasn't really grown at that rate. Now, Apple's terrible year so far. Obviously, we know that market cap stands at $2.6 trillion, significantly lower than Microsoft's $3 trillion market cap, and a few brokerages also downgraded Apple stock to a sell rating in January over concerns that iPhone demand, especially in China. The company reported in the last quarterly earnings that its net sales in China fell 13%, and we actually did see some additional information coming out that the China demand is slowing down on the back of market share gains from Huawei and Vivo, and those two companies are actually dominating a little bit more and kind of knocks down Apple's market share to the number 4 spot, which obviously is a little bit concerning. And again, like I said, it all comes down to innovation, right? Apple's innovation is going to be key. Do they really have the potential to continue to innovate and come out with some new products? Of course, their AI launch is going to be very important. The Vision Pro, in my opinion, the $3,500 headset is not the best value for money when you compare that to the Meta Quest Pro, which Mark Zuckerberg also did a review for both the Vision Pro and of course the Meta Quest, and he did mention that for majority of people, for the normal average human person, the Meta Quest Pro is much better value for money, and Vision Pro is going to be more for experts and more special sort of people that are in this industry in the metaverse that want to kind of take their applications to the next level. Now, Melius Research also mentioned that forget the car, what matters most for this stock is AI strategy launch coming in June, and to us this is the most important launch since the iPhone. So again, I mean, Tim Cook really has to step it up in terms of innovation and what type of products and services are they going to launch to kind of reaccelerate that growth back up. And of course, as Apple plays AI catch up. Now, moving over to Tesla. Now, first, let's just quickly go over the technical analysis for Apple here, and again, as you'll notice that it continues to slide lower and lower. It got a huge breakdown below 180. I think the next stop for Apple is going to be 165. So I think that's the level to keep in mind because that's really where we are potentially headed. That was a very strong support back in October of 23. Apple did rally a little bit over 20%, and that is going to be that next level to keep in mind for Apple at 165. That's the next support. We are coming down to very oversold levels on the RSI and on the MACD as well. So it's possible, in my opinion, that 165 is where we end up next for Apple moving forward. So that is going to be that next target level to watch at close to 165 for Apple. Now, moving over to Tesla, and Tesla here also struggling this week. It's down a little bit over 12.8%, getting a huge rejection at 200s. So again, couple headlines coming out with price cuts and some subsidies that are offering, $4,800, close to $5,000 with price reductions for some Chinese models. That again is kind of spurring some concerns over operating margins and gross margins and how they're going to continue to compress. Cathie Wood did pick up over 63,000 shares of Tesla today, and Dan Ives continues to maintain his buy rating on Tesla at a very bullish $315 target, despite Tesla's recent problems in China, arson in Berlin, and slowing EV demand as well. So the bottom line is, Tesla needs to kind of hold its ground when it comes to margins and profitability, because that's really what investors and institutional investors more specifically care about. At the end of the day, as I've always mentioned on the channel, nothing really matters. Forget about everything you knew about finance, investing, trading, whatever. What matters is profitability, profitability, profitability. The bottom line is what matters. Companies that are turning the corner towards profitability, take a look at how they're doing. CrowdStrike, Palo Alto Network, Palantir, SoFi. A lot of these companies have done really well because they've turned the corner towards profitability and they're getting a lot of institutional involvement. Companies that are going in the opposite direction, Tesla, Upstart, a lot of them have not really done well because profitability is key. At the end of the day, bottom line earnings is what Wall Street cares about. And if Tesla continues with these price cuts and margin compression, then of course it's not going to be great news, unfortunately, for Tesla here. And support level right now is going to stay put at 175, 176. So that's the level to keep in mind over the next couple days. We do still have Jerome Powell's speech and testimony tomorrow in front of Congress. And of course, if we do end up, let's say, breaking down below this level, then the next target is going to be close to my intrinsic value, my fair value in the 150s. I know that Professor DeModron's fair value is in the 170s, 180s, I think 180s already. So it's already below his fair value, but my intrinsic value is going to be closer to 150s. So if it ends up, let's say, trading down to that level, in my opinion, it's going to be somewhat fair valuation for Tesla, considering that it's still only, in my eyes, an electric vehicle company at the moment, unless, of course, otherwise stated, meaning if the revenues and the earnings start accelerating back up on the back of AI, autonomous driving, robotics, other types of technology. So all that's going to be very, very important. But right now, of course, we're still getting rejected at that resistance at $202 per share. And support level is going to stay but right over here at close to 174, 175. For Tesla, below that, we're going to be watching 151. So hope you all enjoyed this video and found it helpful. If you did, make sure that you drop a like. And of course, don't forget to subscribe to the channel if you're just joining us for the first time. Again, link to our Discord and Patreon is going to be down below if you're interested in joining. Like I said, access to all the members-only private videos, including our trade alerts and trade ideas. Link's going to be down below. As always, happy investing. I'll see you all in the next video.